Welcome to Rockstock Channel and Lithium-ion Rocks. Actually, this is our podcast, but it's our first video version of our podcast. And we have one of our most popular and repeat guests, Gerrit Fuelling, here. Gerrit will speak about his background. You are ex-Rockwood, which is now Albemarle, and we're responsible for some $200 million of sales in Asia, if I recall. But there's a number of lithium experts, commentators kind of out there in the market, who have come from, FMC, Livent, SQM and the like, but, those are brine-focused companies. You had the benefit at Rockwood of both the world-class Greenbushes asset, Talison, as well as, the Atacama. So you could talk a bit from that perspective. So why don't you introduce yourself a little bit briefly, and then the focus of this conversation will be, cover multiple topics, but Albemarle had a teach-in at Jefferies last week where they kind of talked about spodumene, brine, and clay deposits, and I want to talk a little bit through some of that, as well as I believe we're in what I'm calling Lithium 3.0. The bull market has returned to some extent, post battery day with Tesla, and Tesla obviously signed an agreement with Piedmont, but very significantly, agreed or is getting into the lithium business directly with a hydroxide plant, in America. So a lot's happening, and I think it's very timely to be speaking with you and getting your perspective. So please just introduce yourself a little bit and your background, and then we'll take it from there.
Thank you, Howard. I started or worked 28 years with what is now Albemarle. It used to be Chemetall and then Rockwood Lithium, so it became Rockwood. Chemetall became a subsidiary of Rockwood in 2004, and I've been started in my career basically setting up the Asian operations of Chemetall. Not only for the lithium space, but also for other divisions we had at that time. So that's seasoned chemicals, metal products, and a number of polymer activities.
So Albemarle produces 85,000 tons a year in a 300,000 ton a year market. I guess it's a split between hydroxide and carbonate, and as well as some specialties, but we're not going to focus so much on those specialties for the moment. Albemarle, 60% of their lithium is going into energy storage applications. That is going to grow very significantly because that's the key driver of the lithium business. But they have, like we said earlier, the Talison asset, Greenbushes, they own 49% of that hard rock deposit. And then they have conversion facilities in China for those assets. And then in Chile, they have the Salar de Atacama, which is a very large and very low cost, a high grade resource that largely produces carbonate, although they convert some of that carbonate in their North Carolina processing facility. That North Carolina processing facility also processes, a small mine that Albemarle has at Silver Peak in Nevada. Albemarle also made an acquisition, a big acquisition last year of Wodgina from Mineral Resources, acquired control, 60% of that. That's a hard rock spodumene deposit. And they have a brownfield past producing mine, Kings Mountain, in North Carolina, which they spoke about, at a recent teach-in, among other topics, at this Jefferies investment bank webinar last week. I want to talk a lot about that presentation and the overall Albemarle strategy, which has largely been focused on high nickel cathode chemistries, lithium hydroxide focus, and they have determined that kind of hard rock spodumene assets are the way to go. So they're expanding at Greenbushes. They bought Wodgina, and they're building downstream hydroxide plant in Kemerton, Western Australia. They've also talked about possibly buying additional conversion capacity, in China. At the same time, they are expanding in the Atacama, the La Negra 3 and 4, which has taken, a very long time, but they are expanding there. But there's been a lot of, post-battery day, there was a lot of talk about clay, a little bit of talk about Tesla's, downstream, integration. But this presentation, and I want to talk to some of these slides, I'm going to show some of these slides in this video, from that Jefferies event. The slide 6 shows kind of mineral resources vary in quality, grade, and chemical profile, and they show basically clay and hard rock deposits, and show that Greenbushes is high on the grade side and very large on the resource estimate side. And then very much beneath that, they have a number of clay assets, which are very large, but low grade, as they call it. And then to the left, they have, higher grade deposits, but smaller. The next slide they show is their brine resources, where they show, Salar de Atacama all the way to the right in terms of size, in terms of grade, and then bunched together all the way to the left and lower are a lot of Argentine brine deposits. One Chilean deposit, that's small-ish, but very high grade, and then they show their Silver Peak mine, which is both small and low grade, and not super high priority. And then on slide 9, they talk about the key chemical routes to processing lithium hydroxide and how they rank all of these different assets relative to the ones that they own, with spodumene mining, being the top with all pluses on a yield conversion, on a cost, variable, on a capital conversion, as well as on sustainability metrics in terms of energy intensity and fresh water use. And as you go further down into brines, into clay, they talked about the challenges, in particular of variations of various clay processing, et cetera. So that's a long lead in, but as a former Albemarle person, listening to what Albemarle is saying today, some of it I think is pushback against the clay narrative that Elon Musk was putting forth during Battery Day, but others are on the basis of the existing assets that they have. So they've prioritized hard rock in terms of their acquisition strategy, and they've significantly de-emphasized, not aggressively pursued clay or alternative brine technologies. And so could you just comment, I guess, I think you've listened to that presentation, you've looked at the presentation, what's true and less true in kind of what they're saying, or your perspective on their overall strategy and as it pertains to the various flow sheets and types of assets and locations, etc.
This presentation, that is basically only describing the routes to hydroxide. So if you take a route to carbonate, this slide might look slightly different, because then a brine operation is probably preferable, as might be preferable if it offers high concentration and a cheaper routing than via the hard rock. You have to see it, or what they do is they see it through their particular lens. So if you have these large, very large and high-grade resources like the Atacama, that's the highest grade brine, no doubt. They own 50% of Talison, which is the highest grade hard rock spodumene, and they have on top of this a high grade, or the second highest grade probably so far available in Kings Mountain, still sitting there. So when you come from this perspective, then I believe it's consistent to say, we can manufacture hydroxide from these hard rock facilities we have at probably the lowest cost worldwide. This is one point. And the second point point is they have acquired Wodgina, and they also have another, I think as far as I remember, the Salar de Los Angeles. So it's another brine asset in Argentina, which at the moment is not developed. But these acquisitions or these resources will enable this company to grow, and the market is still at the very beginning. So from this viewpoint, they have assets which will enable them to grow for the next 10, 15 years. It will cost a lot of money, but there is no other company worldwide who has this ability to grow in these dimensions. And I think this is, from the strategic point, strategy is always long-term, that's the right way to do. At the same time, if you own or are able to handle a hard rock conversion from from spodumene to hydroxide, you are able in a relatively, and the mine is developed already and you only need to expand the mine operation, then time to market plays a role. And I think what people forget is that demands are rising or will rise very fast up to 2025 and then beyond. And you have to fill this gap. And the point they have been making in between the lines, they didn't say it explicitly, is that all these other technologies like alkaline leaching, what you see on this slide, you mentioned this slide 9 of their presentation, this solvent extraction, metal organic membranes, membrane electrolysis and so on, that those are development products or development routes which need time and money to develop. And you don't have the time. So the incumbents basically, and as well as the Chinese converters, will have to fill the gap to satisfy the market demand. And even with the existing processes and resources, this will be a challenge, because still you need to build a plant, you need to ramp it up, and this takes for an incumbent 4 to 5 years. And we have seen this as at Kwinana, Tianqi. This is at the moment not operational and will take time to ramp up, probably 2 years or 3 years, because the people have no experience over there. So from this perspective, I think when you go through these sheets, you can understand that there is a focus on these hard rock things, because they will also be able to create a cash flow. And Albemarle, SQM, or the incumbents, what they do is basically they have to finance the expansion through their cash flow, free cash flow. And if they don't have it, they reduce expansion, or they cut investments. And that's what they actually do. And all the others, the junior miners or new projects, basically have to rely on capital markets and don't get the funding. So they are delayed, and this takes time. So they won't be able to feed the market or supply the market when material is needed. Simply as very simple as that. Huh?
Albemarle, yes, presented this slide in the case of lithium hydroxide, and they put up and made this whole argument on going to hydroxide, because that's where Tesla is largely going to, and it's largely where Western OEMs are going, which is high nickel cathode applications. So if you're talking about the Tesla Semi, the Cybertruck, those are massive nickel intense, require hydroxide. They had this slide which showed those products on the right side, and then they had the medium grade, but those are for like the Model S and the Model X and the Model Y, long range, but also high nickel, also requiring hydroxide. Then in the left-hand camp, they had basically LFP focused, cathode products, which are like the Model 3 short range in China, and energy storage applications. But so when they talk about hydroxide, they talk about premium range, premium priced products for the most part, to Western markets. So my observation is, that there's some argument that the market will be balanced between hydroxide and carbonate over time, and carbonate's not going away, and I get that, and I understand that, and I get that there's a role for LFP, lower range applications. Not everybody needs super high range, and it's more cost effective. But when I think of that argument for carbonate, I think about mostly China, mostly cheaper cost. Livent calls carbonate a base lithium compound, and they consider hydroxide a performance lithium compound, meaning, carbonate more commodity, hydroxide more specialty more premium priced, and for Western markets. And that's where Albemarle is really gearing their business. That they've focused on. That's why they bought Wodgina. That's why they're aggressively expanding spodumene to hydroxide a lot more than they are their carbonate expansion in Atacama. So is that analysis overall fair, what I just described?
Even I would disagree with one point. So even in an LFP, or if you do carbonate-based cathodes for EV applications, you need a higher quality standard than is the case for the technical applications. Simply because the material has what we say in legal terms to be fit for purpose, and it's a term which makes or which requires certain quality procedures in order to achieve this. With the hydroxide expansion, yes, I agree. From today's viewpoint, it seems so that everything is going to need or to convert hydroxide, and if you have these resources Albemarle has, then it is of course feasible to, or cheaper probably, to convert hard rock spodumene to hydroxide than going via carbonate. That's natural. Okay. So there is no addition to that.
I'm not questioning at all that like a carbonate battery or LFP battery going into a Model 3 short range in China is going to be a more stringent carbonate needed than one that might go into a laptop or a phone or some other application. I have no doubt about that, and you could see in SQM's pricing, they have it was as low as 3,300, last month, but like in the 4,000s, but they're also selling product kind of in the 8,000s, but it's still more a China-focused market. And within China, in general, they're operating on more short-term rather than long-term contracts. They're generally operating on lower margins, and ultimately those still are cheaper cars, cheaper applications. If you look at the most popular car in China, Chinese manufacturer, $4,000 or $5,000 car that's LFP, there's immense price sensitivity. There's always going to be a greater price sensitivity into even the highest quality carbonate, right? So my sense is that the margins for carbonate are because, for all of these reasons, it's going into cheaper applications and it's targeting the China market, that product's going to be more commoditized, more lower margin, more price sensitive, whereas long-term contracts that Albemarle is pursuing with Tesla, with Volkswagen, and similarly, Ganfeng is getting big contracts with VW and BMW for hydroxide. The prices of hydroxide, of battery quality hydroxide, are going to trade at a significant premium to even the highest price, China battery grade carbonate, above and beyond just the conversion cost, which is often like, oh, there may be a hydroxide premium and maybe 1,000, 2,000. We're thinking that there could be a wider gap in price between these two for a longer period of time because of the markets that they serve and the price of the products, more premium product. Do you agree with that logic?
It depends a bit on the overall market situation. So if the markets get short or tight, then Chinese converters will scramble to get carbonate in order to convert it to hydroxide. This is what they can do. And at that time, then also it will have it will create a tightness on carbonate, and what we have seen in the past, the carbonate prices will increase. So overall, the future could look like that. You have these more stable long-term pricing agreements, contracts, which are fixed on volumes per year over 5 or 8 years or whatsoever, and with a certain adjustment to actual market prices, but moving in a relatively tight range. Whilst the carbonate, from time to time, when it goes up and down, can create substantial margins because it's subject to spot market pricing impacts. And that's what we have seen maybe 2 years or 3 years ago when prices peaked so high that this could happen in the future again. This is not sustainable. So it's not, in my opinion, it's a good way, or it's being in the market at that time and having the capacity then to supply these spot markets will create a lot of profits, but you have higher fluctuations in your P&L over the years and or even over the quarters. So whether this is going to be honored or liked by shareholders is another question. So the question is, what kind of strategy are you going to follow? In my opinion, then these longer term things on long-term contracts is more from this viewpoint, it's easier to handle your cash flows and investments.
If you're a Western OEM, if you're Tesla, you're VW, you don't want variable pricing every year, right? Up and down, right? Okay, so so the hydroxide market, it lends itself to these longer term contracts. But do you see, let's say, Tesla Model 3 short range in China? I don't think they want, long-term variability in carbonate battery quality. Is the carbonate market in China always just going to be this super volatile, or will there be long-term contracts, in China as well? Maybe for Western OEMs, the Chinese companies don't seem to want to operate in that way. What do you think about that for carbonate long-term pricing, in China?
I think so far we haven't seen any direct involvement of OEMs. So the market today is between the lithium producer and the cathode producer, and the cathode producer is sandwiched. So that's why you have this short-term agreements and spot market arrangements. And the current situation is that, for example, in Korea or in particular in Japan, cathode producers or people like Panasonic, Sumitomo are more geared on longer term safe supply agreements. So if or the moment OEMs will ask for longer term commitments on the cathode side as well as on the lithium side, then probably you get a different first of all, you will get a different price level, because at the current one nobody will agree to this. And second, you may then get a rethinking of the whole market situation. So far, Chinese have been relying on this is a little bit of history. So Chinese converters and lithium producers were supplying this 3C routes mainly. Yeah? And you get, as a cathode producer, you get a contract from a battery manufacturer like LG or Samsung or Chinese ATL, whatsoever, and maybe for 3 months. And or if you're lucky, maybe 6 months. But then because of the volatility of the consumer markets and change in batteries and changes in cathodes and everything. So that's one reason these guys were relying on short-term, in my opinion, on short-term or spot market prices. Because if they would agree to a longer-term contract and would be hit or fixed into a higher pricing level, in the consumer industry you aren't competitive. You're out of the business immediately with the margins they have. These guys only have 3%. So
right.
Yeah, so I think there are two. This is kind of two separate markets. Once OEMs get in with the demand on a stable pricing, you will see higher prices. Have to, because the current level is not sustainable. And second, you may equalize it, and this can or might happen in China as well.
Looking at this slide again and just focusing on the spodumene side, and you're looking at the very top end in the dark blue, from a concentration point of view, it's all the same: mining, crushing, flotation, then calcination. Then after the calcination, Albemarle is saying, they go sulfuric acid leaching, purification by precipitation and ion exchange, and then crystallization with caustic that's the best way in terms of yield, cost, capital, energy, and fresh water. On the bottom of that spodumene chart, which they call concept, is alkaline leaching and crystallization with caustic. And having done some research of Tesla talking about a sulfate-free process, what I found was that Odutech, a couple of companies like Caliber and I think Critical Elements are using. I've looked at their studies. They call themselves sulfate-free, and they say they're using alkaline leaching. So is this genuinely concept, right? Or this seems to be more advanced than concept? And then that's question number one. Then question number two, where Albemarle is saying minus on, yield, minus on cost, minus on capital, and minus on energy and fresh water. It makes it look like, why in the world why would Tesla do this if the other, what Albemarle is using is so much better? So are they right? Like Tesla must be the sulfate-free aspect of it, this Odutech process or this alkaline leaching must have some benefits. Otherwise, why wouldn't Tesla just be, doing the sulfuric acid leaching?
I think you have two different angles of viewing it, as usual. So Albemarle has this sulfuric acid leaching process available, and the only thing they need to do, very basically, is paste and copy. So that's safe in parentheses. So and if you have to be in the market at a certain time, so in order to reduce timelines, for them that's the way to go, because they know how it works. They can easily plan it. And still they will have ramp-up issues when they do Kwinana, for example. So from their viewpoint, it's all plus. If you are a newcomer, you could rely on these paste and copy things, but you would have to hire people who are familiar with this process. So as a junior, like be it Tesla or maybe Critical Elements, I think are also looking at the Odutech process. They have a different starting point, and for them, if they can make it work, then you won't see all these minuses there. But then this process has even some advantage that you can also make instead of hydroxide carbonate with it. So it depends a bit on where you start from. So I would not necessarily agree that the OPEX is then higher. So capital may be, but overall this is a plausible alternative. The only thing is, it's from the outside, when I look at it and talk to, for example, customers who are users, this has not been done yet on a very large scale. So you need to have some time buffer, not to put it on a timeline too narrow, because you have to get used to this and try to ramp it up. But I think this is a plausible alternative.
If it was such a slam dunk to use sulfuric acid, purification by precipitation, and then crystallization with caustic, which is a familiar, proven process, why wouldn't Tesla use that unless there were some positive either cost or sustainability attributes that are preferred? Right? There must be a reason. Like Albemarle's arguing that this alkaline leaching, they said it in that presentation, it's a less aggressive reagent compared to sulfuric acid, right? In terms of unlocking the lithium ions from the rock, right? If you use a lesser reagent, it comes with, additional, energy requirements or heating requirements or fresh water requirements, which is why I think that these, they're labeling these as minuses. But you're saying that there are potential positives, if this process, if they go this route and then they scale that route, because clearly Tesla is, planning, I think, a 15,000 ton initial project, but they're planning to expand that aggressively, and they're not using Albemarle's technology in this regard. They're using a sulfate-free process, which seems to be this Odutech process, and there must be a reason for that.
Yeah, it's an elegant process. To stipulate from the very beginning that it won't work, I think is not correct. And Tesla has the means, the financial means to execute this. So from this viewpoint, I think it's probably an alternative to do. And maybe for them it's then easier to handle the byproduct. So when you handle sulfuric acid, you end up with sodium sulfate, which somewhere you have to sell it again or dump it or something like this. Yeah. So it's you have to see also the context. So I think when you do a major handling of those processes in China, where you have plenty of sulfuric acid with paste and copy, and you are quick to the market, and you need speed, then you don't go for experiments. It adds some risk, and what a listed company which has to pay dividends and is basically investing $1 billion a year into this business has to do is they have to get projects online in order to make enough cash to continue their expansion.
And Tesla, which is not paying a dividend, but it's a growth-focused company with a long-term vision to enhance the sustainability of man, is not saying, let's just do things historically like they've always been done, but going back to first principles or figuring out a way that could be more sustainable. And this sulfate-free process seems to be more sustainable, right? And for a similar, cost, right? CapEx and OpEx, still to be seen. They're not in the lithium hydroxide business. They're going to learn like everybody else. They're going to have to recruit smart people from Albemarle and Livent, I imagine. They're going to pick off some people to go to Texas, to help with this plan. But this plan seems to be much more considered and advanced in their thinking than I think their clay, salt plus water, and mud, and clay, and you get lithium, right? That's something they've talked about, but this is something that they're actually on hard rock, implementing. Could we talk about, let's go to the clay aspect of it then, right? So you may not be an expert in this so much, but as I'm looking at, and we've done a video on this, clay, they're basically saying mining and crushing and milling, it might be actually slightly lower cost than hard rock because it's a softer clay. But then they, on the flow sheets here, they say you either go the sulfate roasting process, or you go to a sulfuric acid leaching, or though you go to an other route, to obtain a brine. So as I was looking at those three, sulfate roasting, which is more like a hard rock process, that seems to be what Bacanora is using. They're saying that that's, I guess the most advanced. It's not concept or pilot. Then they show sulfuric acid leaching, and they label that as pilot. That's Lithium Americas is doing sulfuric acid leaching at Thacker Pass. So they consider that pilot. And then the third route is other routes to obtain a brine, and then begin the concentration. And then all the way to the right, they say development required, right? It's not even minuses, it's like development required. So this is kind of what Tesla was saying. They said it's an acid-free process, so it's water plus salt. So I think that's what they're talking about in concept, and in major development required. I guess, do you agree with that, or what do you know about, I guess, Bacanora, Lithium Americas, and this other idea that Tesla's put out there?
I'm not a process engineer, but I think for all clays, it's kind of still development stage. It has never been done on a very large scale. So be it Bacanora, be it Lithium Americas, you have to treat these clays somehow that in a way that you are able to leach out the lithium. From the mining perspective, it's cheap, but from the processing perspective, it's at least our engineers or chemists in Rockwood Lithium consider this always. They consider it doable, but with not easy, difficult. So we would have preferred, like Albemarle, to go for spodumene or hard rock or wood brine.
Your comments are very interesting because, I worked for Western Lithium, and what was now Thacker Pass was called Kings Valley, and from 2009, 10, 11, 12, 13, 14, right? And they were approaching Rockwood, right? And other groups to potentially strategic partner. So clearly Rockwood has thought about clays as an opportunity. Like when they had an opportunity to buy Wodgina, right? Or buy Lithium Americas in Nevada, right? They went to Wodgina, right? So that was an informed view based on, work that they had done internally. But could you give us some insight into that internal Rockwood Albemarle work, because they emphasize that they're like Tesla. Like if you have a new battery, you're going to go to Tesla to kind of test it out. If you have a new lithium deposit, they have lots of R&D. They have Department of Energy grants. They're working on some electrodialysis. They actually gave a nod to kind of Nemaska, saying that that could potentially not Nemaska's process, but electrodialysis could be potentially disruptive. But when they were talking about their smack over brines, they have bromine. They're like what Lanxess is doing with Standard Lithium. There's no reason that Albemarle can't do that, but they're choosing not to because it's more challenged, right? It's more complicated. So they're choosing not to do clay. But like, how much work from your experience at Rockwood have they really done on that R&D to kind of draw that conclusion?
I mean, at that time when we had to decide what to acquire, there were less projects available than there are today. So this was basically done maybe 5, 6, 7 years ago. And at that time the decision was, if we buy something, then it has to be the best. It was Greenbushes, no doubt about that. Because they were established, they had the highest concentration, they knew how to run the mine and to make sure that you have a consistent output, which is important for the yields, as Albemarle also said, on your production. So this was target number one, and all the others were nice to have, but not really to focus on. And We also looked into thermal brines, like in California, like, I don't know, former Symbol and whatever is available there. But there are there are a lot of negative or challenges into these technologies. And we said, look, we have a business which can create that much of cash. And we have to expand based on the internal available free cash flow. And we are not a Tesla. We can't go to and our shareholders want, it's not like Tesla shareholders who value a company, okay, future growth, but as Albemarle you have to pay, or as Rockwood you had to pay dividends, you had to, a lot of other restrictions which simply deny you the possibilities a company like Tesla has. And then you have to focus on things which you can really execute fast, or relatively fast. Yeah, so faster than other projects which have inherent higher risks. This does not mean that we hadn't looked at this. So we still think today that this Czech project in Europe, the only feasible, in my opinion, the really feasible or sizable project to pursue is Sinovac. But if we go to other projects, for example, we did or started in early 2013-14. We set up a membrane electrolysis for the recycling purposes of lithium coming out of lithium battery recycling. But these processes to do take time. So I think we gave ourselves, the plant itself, 850 tons capacity, was paid or subsidized by the German government. But we considered that we need about 10 years to bring it really, to make it really workable. And you can't then, and knowing this, that those technologies simply take time, you have to see what your options are. And that's why, for example, SQM should focus and get finally their expansions in Atacama done. And yeah, Livent can't grow at all because they have no money to acquire new assets, and they can grow a little bit in Argentina. So if you want to be number one and to stay number one, then the best thing to do is get after the resources which are high in concentration, relatively low in impurities, and rely on processes which are proven, because these are the ones who bring your capacity into market in time.